Welcome to Real Vision Crypto. I'm Ash Bennington. Today, a roundtable conversation to update our viewers on the critical and rapidly evolving topic of crypto regulation, specifically focusing on spot Bitcoin ETFs, an important topic in this space. I'm joined today by Perianne Boring, founder and CEO of the Chamber of Digital Commerce, Mike Castiglione, Director of Regulatory Affairs of Digital Assets at Eventus, and Greg King, founder and CEO of Osprey Funds. Perianne, first over to you. Help us frame this conversation. Where are we right now with regard to Bitcoin ETFs and your report?
Hey Ash, it's great to be with you today. We have just released a report on Bitcoin ETFs. We spent the majority of the summer heads down working with over 30 market participants to really understand what has happened over the past almost a decade of getting a Bitcoin ETF to market. We feel strongly that it is time for US investors to have access to a Bitcoin ETF that directly holds Bitcoin. It really is quite the conundrum to where we are today, where we have Bitcoin futures ETFs, but not a spot. So throughout our report, we have really detailed how the SEC has imposed a completely different regulatory standard that is unique only to Bitcoin on the applicants for a Bitcoin ETF. And at the same time, the issuers and other industry participants, they have addressed the concerns that the SEC has put forward and their denials, but yet they continue to be denied. So why is that? And not to be a spoiler alert, but it is of our opinion that this has gotten to a point where it is less about addressing the concerns put forward by the SEC and more about politics, which is discouraging. But there are a lot of politics at play that have brought us to where we are today. So we have shared our findings with the community. We're also sharing our findings with Congress and others who can help provide oversight to help us get a Bitcoin ETF to market as soon as possible.
Let me ask the obvious question here. What's the significance of a spot Bitcoin ETF? What would it mean to the industry? Why is it important for investors? Obviously, this is a topic that's been bandied about quite a bit, but I want to contextualize what we're talking about here and its significance in the space. Mike, Greg, jump in.
Well, I can go ahead. I mean, I think that ETFs have, the ETF invention, if you want to call it that, is a little over 20 years old, grew out of mutual funds, which were tradable once a day. And the ETF just enabled folks to trade that fund intraday. But we've all, evolved to where we expect things in real time. And the ETF structure really continues to be at the forefront of how money is managed these days. And so I think what you're looking at with this Bitcoin ETF question is really, can we get Bitcoin exposure into the sort of gold standard structure that financial advisors use and that retail investors themselves use? And the answer so far has been no. While, as Perianne said, the industry has been trying to alleviate the concerns that the SEC has, and I think at this point we're sort of left with a head scratcher as to why we can't get to a yes.
Yeah, to build on what Greg is saying and what Perianne laid out for us, we at Eventus believe that technology, when rightly applied, can get us both market innovation and safety. And we believe in trusted and transparent markets. And one thing that the report lays out, and we were really fortunate to contribute to this, is that the industry writ large has invested a lot and have come a long way in adopting technology that allows them to detect and deter market manipulation. So regulators kind of identify this as a problem, and it's a serious problem, and it's a problem across all asset classes. But what we're seeing with the major crypto firms, crypto venues, and also the companies that would issue a Bitcoin ETF is that they're also serious about this. They're serious about adopting the right systems and compliance systems so that they can understand and act if there is an instance of price manipulation. And that just leads to broader, safer markets. And it also allows, as Greg said, us to give investors an option for purchasing Bitcoin through an ETF.
So let's address another point here that I think many of our viewers may be wondering. What's the stumbling block? What's the challenge? Why has this been a problem? There have been lots of rumors floating around about why this has not been approved yet. What's the summary that you guys have come away with? Why is this something that's still an issue?
So, and this is outlined in the report in detail, but the SEC's official justification for denying applications, it's remained the same over the past, it's been about 9 years since the first company applied for a spot Bitcoin ETF. And despite there being significant maturation as well as institutionalization of the market and the industry addressing the SEC's concerns, we haven't really moved the needle on getting this done, but their initial issues have been around market manipulation. And so
Right.
it was the Winklevoss who applied for the first spot Bitcoin ETF in 2013. And after that, the SEC imposed on the industry this unprecedented requirement that has come to be named the Winklevoss standard. And it says that an applicant has to one, they said you need to have these surveillance sharing agreements in place, which once we got Bitcoin futures, the CME group had these surveillance sharing arrangements and infrastructure set up. So they met that. And then the SEC said, oh, well, you have to prove that price discovery is happening on the CME and not the crypto exchanges. And there's been a number of studies that have been provided that that show to a significant basis that price discovery is happening on the CME. So at this point, a lot of our members feel like there is no data that could ever be provided to the SEC at this point that would change their position. They've been given all the data they need. Secondly, nobody else is required. Other industries have not been required to provide this type of information or go through these types of hoops. And maybe Greg can speak to that in detail because, of course, his ETF experience predates Bitcoin. But it does come down to that market manipulation piece, which, again, we detail in the report a number of different ways how the industry has addressed those concerns.
So let's just unpack this a little bit for our viewers who may be scratching their heads about what price discovery actually means. Price discovery is the process of buyers and sellers coming together to come up with valid prices. In other words, the concern here is that things could happen off the exchanges, off CME, that could effectively impact prices and therefore have the potential to manipulate it. In your view, Perianne, you believe that standard has been met. What do you guys think about this issue of price discovery and where we are with that?
I can jump in here. The tricky part about this is that futures and spot markets are connected, and that's sort of how markets work. There shouldn't be arbitrage opportunities between the two. And so I think the industry understood the SEC's concerns about manipulation because, let's face it, there is a lot of trading that happens outside of U.S. borders. The SEC and market regulators like to have access to those venues and that trading information if there should be some suspicious activity. And they tend to handle that in the U.S. through information sharing agreements among those exchanges. But they're not able to put that in place for exchanges in Asia and what have you.
Right.
So you do have a global 24/7 market, and that is a new thing. It's pervasive in other areas though, like mainly commodities and gold, for example. But let's give them that. So they had a concern around manipulation because a lot of the trading basically happens offshore. Fine, we understood that. But then you have a futures ETF that's approved. And the futures market is very much linked to the spot market. And so I think they had to do a little bit of gymnastics to sort of get comfortable with the one and not the other. And that's the point at which I think the industry became just really confused because the internal logic there to prove the one and not the other, in my opinion, is a bit of a stretch. And so they continue to Perianne's point about, there's no amount of data that they'll be satisfied with. I don't know what the industry view is on at what point the majority of crypto trading or Bitcoin spot trading will happen within U.S. borders or on regulated exchanges. But I'm personally not holding my breath for that. So if that's the standard, then we're a long ways away. It's just that the introduction of the futures-based product kind of confused the issue to a lot of us.
Yeah, this is kind of a perplexing point. The idea that the markets are obviously linked, the so-called basis trade where people are buying or selling the underlying versus the futures. What's the stated justification for why ETFs have been approved for futures but not for spot?
Well, I think it's a lot of this price discovery argument. I think that the issuers that put those forward were able to at least demonstrate there's price discovery happening there on the futures exchange, and so that's something that they were able to sort of hang their hat on. But again, you have to sort of close one eye and look with the other, and vice versa, depending on which angle you're kind of coming from. And clearly, the spot market is much bigger than the futures market, and so. There's another, if we want to go into the weeds, there's another nuance that occurred, which is that the SEC approved not only a 1940 Act Bitcoin futures product, but a 1933 Act Bitcoin futures product. And that's a sort of another layer deep in terms of complexity and kind of countervailing messaging, if I can put it that way.
What's the distinction and why does it matter?
Yeah, so the 40 Act, the Investment Company Act of 1940, right, was put in place, and it governs mutual funds and publicly offered funds in the U.S. It is considered by everyone to, and Mr. Gensler included, to be the gold standard set of investor protections if you're designing investment products for the retail public in the U.S. And a lot of the messaging from the SEC was that ahead of the approval was that they could potentially see themselves getting comfortable with a 40 Act fund that traded Bitcoin futures. And so those of us kind of watching the space thought, wow, I can't believe they're telegraphing that. And sure enough, the approval came shortly thereafter. A spot Bitcoin ETF could never be a 40 Act fund because it's directly holding crypto, which is a commodity, or let's say Bitcoin, which is a commodity. So by definition, it would need to be a 33 Act fund. And I'm not a lawyer, so there's a lot of people that could explain this a lot better to you, but I've launched over 100 of these products. And the way I think of it is the 33 Act structure governs companies rather than investment funds. And so the gold fund, for example, GLD, largest gold ETF, that's a 1933 Act structure. And it's basically a grantor trust that just holds a physical commodity. That's it. The fiduciary requirements over the top of that from the issuer's perspective are much lighter than for a 40 Act fund manager who is very much a fiduciary and responsible for managing that product. And there's a sort of an extra set of requirements that they need to conform to. So we understood the 40 Act futures fund. Still a bit of a head scratcher, but maybe the reason why they don't want spot is because they don't like the 33 Act. It doesn't offer as many protections. So then they let that through, and okay, you could kind of understand that. And then they subsequently approved a 33 Act futures-based fund. And so it really is confusing, I think, at this point, and frankly, not in the best interest of the investing public.
Mike, from your perspective, you're in the trust business. How do you think about this issue?
Yeah, just to go a bit deeper on market manipulation and the tools that are available to detect and deter, as the regulators are rightly asking folks to do. So what is possible with the current state of tools is you take market data, you take order data, you take trading data, you centralize it, and there's software where you're able to run algorithms and other calculations, including machine learning models, to detect anomalies. And that will allow the crypto venues or any trading venue to identify potential things that they have to investigate to see if there is fraudulent behavior, price manipulation. Like, we certainly don't want price manipulation because that acts as a tax, like a hidden fee on normal investors. So rightly so, you want to get that out of the market as much as possible. So what the leading crypto venues have already done, even though it's not like fully required by regulation, is that they said, yes, let's do this already. Let's preemptively do this. It's good for our customers. It's good for the broader market ecosystem. And it's those venues that would the prices that are discovered on those venues would feed in an index that and it's those prices that would kind of underlie the price of a Bitcoin ETF. In addition, a Bitcoin ETF would be a regulated investment vehicle, issued by professional institutions, and all the market participants involved, the broker dealers, the national exchanges, would also be regulated. So you could kind of see a Bitcoin spot ETF as a step toward a greater institutionalization, a greater movement toward the expanding trust of the broader crypto ecosystem, and also give investors more options.
Yeah, I think these are really key points. And I think we can all share the SEC's wants and concerns. And at the top of that is investor protections. So I don't think their concerns are unjustifiable, but it's just how we've gotten to where we are today is definitely a head scratcher. But you would think if that is their goal, that they would want to have a spot Bitcoin ETF come to market, because the absence of one means that retail investors are forced to invest in Bitcoin alone. They are not able to get direct access to Bitcoin investments through their financial advisory relationships or under the SEC's the protections of their registration and disclosure frameworks. So having this product come to market would bring with it all sorts of protections for the retail investor, which at the end of the day, should be what we're prioritizing. But, it seems as though that's not what we've prioritized in this instance.
It really is something of a paradox, isn't it?
Yeah, that's why we're calling it the crypto
It's
conundrum.
And one more thing to add
Yeah.
is, if you look at other jurisdictions, other markets, Canada, Germany, Sweden, I believe Switzerland, they all have the option to purchase crypto through a spot ETF. So we certainly can learn about how these products are operating overseas, see if there are any problems, and learn from these other markets. So this would not be an unprecedented move on the U.S.'s part. But.
Yeah, no, we looked at that in detail in the report. We even interviewed some of the issuers in other jurisdictions. Australia as well has spot crypto ETFs, and some of these countries have even brought Ether ETFs. So we have, I think as a country, we've really fallen behind other jurisdictions. Traditionally, the United States is at the forefront of financial and technological innovation, but not here. And from a U.S. competitiveness perspective, it certainly, I think, makes us less competitive. And there have been no reported instances of hackings or thefts or indications of market manipulation related to other Bitcoin ETFs that are listed on other international exchanges. So we looked at that in detail throughout this. So another kind of piece of the conundrum as to why we don't have one here in the United States.
Perianne, what are some of the risks as you see them to the United States in terms of global competitiveness, in your view, if we do not get ETFs for spot Bitcoin?
Well, I think we talked about the retail investors having additional investor protections by being able to invest alongside with the advice of their financial advisors and under the full protections that the SEC's disclosure frameworks provide. So there's that. The other is there's incredible demand for cryptocurrencies. The White House, in their executive order that was issued earlier this year, found that there's tens of millions of American households who are already owning cryptocurrencies. So there is a lot of interest, but it is reported based on different studies that up to 23% of all the Bitcoin in circulation is actually locked in wallets that people lost their keys to. So Bitcoin is unique, right? It's you have to know how to address public and private key best practices. You have to understand what it means to lose your keys. I admittedly have lost keys before. It's a very painful process. And it's easy to do, and it's unique to other asset classes. So I think having traditional financial services companies providing regulated products could fix a lot of these investor protection issues that, again, I think we all care about. But despite this, Bitcoin's moving on. The cryptocurrency space is going to continue to move forward, whether the United States wants to support the adoption of this technology and this asset class or not. And what's at risk is that the US may not be the leading jurisdiction in this space. And I think that's a huge thing to cede to other jurisdictions and would be one of the biggest mistakes of our generation if we let that happen.
Let me throw this out there to everyone. What happens next based on where we are right now? What do you guys see as the likely scenario or the sort of cone of uncertainty going forward with this issue?
Well, I can just tell you what we're doing. So, I mean, we've put this report together, and we're encouraging our policymakers to provide oversight into what's happened at the SEC. So, Congress has jurisdiction over the Securities and Exchange Commission, and they will have the ability to question and subpoena and bring the commission to testify under oath about what's happened here. So there's really kind of two opportunities or two directions this could go. One is Congress could pass a law, could legislate and bring their oversight authority to help move this forward to get a Bitcoin ETF to market. The other path is litigation. And of course, that process has already started as well. There's at least one company, Grayscale, who's asserted that it will be challenging the SEC's decision to deny their Bitcoin ETF application. And they're bringing a case on the grounds of arbitrary and capricious activity, violations of the Administrative Procedures Act, as well as unfair discrimination between the issuers. So Congress may get involved. That's very possible. And the courts may have to settle this. But they don't have to. The SEC has the authority to do the right thing and to allow a spot Bitcoin ETF to come to market. And maybe they will. But I think this is a win, not an if. It's just been a long and difficult road for the companies who are looking to offer products in this market.
Well, and for the investors who are looking to invest in this market, they've had a lot of suboptimal choices for a while. I mean, you have at this point, to comment on the state of play and where things might go, you have publicly traded ETFs that hold crypto-related stocks as a way that folks are trying to get crypto exposure. And those ETFs, those US-based ETFs themselves, often try to gain a little bit of Bitcoin exposure. And you know how they do this? They buy Canadian ETFs, or they buy products from Europe. And so, I mean, this is kind of craziness. To me, it goes to the mindset of the regulator. The image that kind of keeps coming for me is, we've all been on hikes where there's like guardrails and kind of a cliff dropping off. And what if you're in charge of the guardrails and you notice that there's a path being cut, like a shortcut, and it's well trod, and you can see that people are going outside of where you've designed for them to go? The question is, are you going to try and force them back onto that path when clearly they don't want to do that and they keep going around it in bigger and bigger numbers for years and years and years? Or are you going to just put some guardrails up there because your job is to protect them? So to me, it's a mindset issue. And to be fair, we also have a fragmentation of regulators issue in the US. We've got the CFTC as well. We have banking regulators. I mean, things that have happened in crypto lately with, online, high yield based accounts blowing up. I mean, that was outside the purview. So we don't really have a situation where there's one central authority. And so I personally believe that Congress will need to act. But I also think we could benefit from a different mindset at the SEC.
I wanted to get some key takeaways, some final thoughts. It's been an interesting conversation. I think we've gotten very much into the issues here that are really at stake. A great conversation with everyone. Final thoughts, Mike.
Yeah, a few things. I think this issue just emphasizes the importance of continued public-private dialogue, especially when there's an emerging technology and there are policy trade-offs. The digital chamber is a leader in this, and so many others have reached out to regulators, reached out to lawmakers to increase the knowledge base of where the technology is and how we can innovate and also do it in a safe way. And also, I spent 15 years in government. The public sector has a lot to teach about systemic risk and kind of how they think about problems. So this dialogue certainly should continue going forward and inching the knowledge base. I think there's also a lot we can learn from how this has all been applied in other asset classes. So the issues of market manipulation, fraudulent trading. These themes come up in equities and foreign exchange and fixed income, in other financial instruments. They're ETFs for a whole bunch of commodities you wouldn't expect, right? So they've all have adopted processes and technologies that attack these issues that regulators are talking about. So we can certainly learn from across the board from other asset classes.
Greg, final thoughts, key takeaways.
A couple of things. I think that the SEC, at least this administration, will continue to kind of cling to the narrative around manipulation being their key concern and the main objective, even though, as I pointed out, it seems a little internally inconsistent. So we don't think a spot Bitcoin ETF will make any progress until and unless the administration changes, A, or B, there's some act of Congress. So our focus is on helping to educate the representatives on the Hill about the situation and incentivize them to continue to push legislation forward that will comprehensively address maybe not just the Bitcoin spot ETF issue, but a lot of other concerns that investors have around getting safe access to crypto in the US.
Perianne, we'll give you the last word.
I would say the SEC's increasingly unjustifiable unwillingness to approve a spot Bitcoin ETF is just one example of a larger theme that we're seeing here in the United States. We are increasingly becoming a jurisdiction that is not favorable to innovation for the blockchain technology ecosystem. There's a lot of other areas where we have discouraged innovators from building on blockchains in the United States. We lack regulatory clarity, including within the SEC and how they are regulating different cryptocurrencies or not in this space. But this applies to other agencies as well, whether that's how we tax digital assets. And we also have a complete lack of accounting standards, which is also impeding institutional uptake of digital assets. So this is, again, just one specific example of a larger issue around ensuring that the United States can be a jurisdiction that fosters innovation. And if we are not able to get this right, we have a lot to lose. So this is worth fighting for. We will continue to fight for this. And I think education is one of our biggest tools. If we're able to educate our public policymakers about how important this technology is going to be in the future, that's a great way to address these larger challenges that we have as an industry.
Perianne, Mike, Greg, thank you for joining us.
Thanks so much.
Thank you.
Thanks for watching, everyone.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.